Hey everybody, Boris. Welcome to the crosses section from November 28th, December 2nd, 2016. This week I have three interesting ideas on the crosses that are going to play on the relative strength, relative weakness of a couple of calm dollar moves. If you assume, as I do, the Canadian dollar still remains the weaker of the calm dollars, then I think there's an interesting opportunity here in Euro-CAD to the upside. We'll take a look at the charts in just 1 second, but I kind of like that pop to the upside. Again, this is sort of a double play on the fact that the euro rebounds and on short covering basis, basically on profit taking, and the Canadian dollar either lags or simply gets weaker based upon bad news on the oil front and bad news on Canadian economy front. The next idea that I have, and let's just take a look at everything here on the support resistance levels. The next idea that I have is actually the correction in the yen, and to me one of the easier correction in the yen crosses will be Aussie yen, because I think Aussie is also relatively weak. And if we get a move to the downside in the yen, this is going to be one of the first trades that people are going to dump out of, because this was the big carry trade that everybody flowed into. So any kind of a correction will be the first one to hit it. And then last but not least, again, a relative weakness trade here in Aussie Kiwi. This one is setting up very nicely as it kind of exhausted itself at the 105 level, and I think has a chance to retrace back down towards the 103s. So generally, 145 resist 141 support in Euro CAD, 85 resist 83 support in Aussie yen, and Aussie Kiwi with 106 is definitely a very clear resistance point, and perhaps a move all the way down to the 103s. Let's just take a look at the charts here and see how everything sets up. Let's first take a look at the Euro CAD structure, and you'll see what I'm saying. So here, Euro CAD is very, very similar to Euro dollar, with perhaps just a little bit better dynamics, actually, technically, the euro dollar itself. And you see the 142 is actually probably more accurate to say the 142, and it's remarkable how well that held on a double bottom basis just technically here, right around this level. So 142 definitely held as support, and now 144, 145 comes very much in play, and I think Euro CAD is one of those trades that has more juice to go. In fact, I almost like trading CAD to the downside more against the euro than I like it even against the dollar. I think that one, it's going to have more juice. If I'm right that the CAD is going to be weak next week, it's going to be probably weakest against the euro, and that will provide a very interesting opportunity for anybody who trades it. Now, the other idea is to sort of look for yen cross profit taking. And you can again see the same kind of a thing. It's just an early sign here of a flame out here, a little bit of a shooting star candle, not quite a shooting star candle, but just sort of an inkling of possibility of that, where 85 presents a very serious resist point in the Aussie yen, and now we could trade back clearly to 83 at very minimum on any kind of a corrective basis in Aussie yen. So I like that as a yen correction trade if you're looking for ideas. Then last but not least, of course, is the Tasmanian Sea Cross, the Aussie Kiwi. One of the interesting things is if you look at it on a longer term basis, it's just no doubt that it continues to be in a downtrend. You have a series of lower highs, failed lower highs over here, and this is the one that we've just kind of printed today as kind of a failed lower high. Where would I be wrong? You really don't have to put a stop more than 106.50. It's no more than 100 points, because if it goes all the way up that way, there's clearly something wrong in the thesis. At this point, the trade should start to drift towards the 105s and start to go towards this bottom here around the 104s as a potential test here. And this is, again, a trade on the fact that the Aussie is going to underperform the Kiwi, I think, as the week progresses, mainly because Australian data is going to be weaker than the New Zealand data, and the market is going to probably assign a higher probability of further rate cuts by the RBA than certainly by the RBNZ. So that's how the week shapes up. I'm sort of betting on the fact of Canadian dollar weakness, Australian dollar weakness as the primary relative weakness trades, and the bet, of course, that I think the yen will correct, and the Aussie yen provides probably one of the better entrances for that particular trade. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.